Hey everybody, it's Adrian Zdunchik, CMT chart market technician, crypto Birb, and here we are on the second episode of our RWA session on the hidden revolution, because we are here to talk about the next deeper corners, the deeper down the rabbit hole as we go about unlocking the wealth, and we're gonna discover the entire magic of tokenization. And here we are, joined by our highly esteemed guest to discuss this very topic today, by Paweł Łaskarzewski of Nomad Fulcrum, and by Andrei Grachev, who is the leader, the CEO and the head of DWF Labs. How are we doing, gentlemen?
I feel very, very good. The weather is good. The market is hopefully will go up very soon. And I'm super bullish on that.
Right on. Andrei, I have a question, right? Because what your Twitter bio is very enigmatic, and what it tells you is it crazy about extreme sports, winter racing and competition, crypto trading and investment, veteran, dog lover, and the head of the DWF Labs. Why is the DWF Labs at the very beginning of this incredible series of achievement? At the very end, I should say, yeah.
Sorry, why did we for Labs what?
So DWF Labs is at the very last position, of the Twitter bio. That's what I mean, right?
I understand. Yeah, look, I think because it is, it is kind of explanation of myself, right? And me personally, it's first, I'm a human, right? I'm a person. Then I'm a business, right? That's why this is my kind of character. And then that I lead the DWF Labs. Yeah.
Love it. There's so much to be said about that, actually. And that entire tokenization topic on its own is getting a lot of traction, is getting a lot of attention from the traditional finance, from the Web3 decentralized finance as well. As, for instance, we have people like Larry Fink of the BlackRock, of the biggest ETF issuer, right, their provider. I believe, he says, the next generation for markets, the next generation for securities will be tokenization of securities. No middlemen. We're going to bring down fees even more because of that, dramatically changing the whole ecosystem. And there's another one from Vitalik Buterin, who is a founder of Ethereum. We have so many memes flying all around the internet, with Vitalik basically doing no matter what, he always does it as a head of Ethereum, as a founder of Ethereum. One of them is basically very influential. And he says that if you can make a stablecoin that can actually survive anything up to and including a US dollar hyperinflation, that's a huge opportunity. As well, if you can create something that will feel like a lifeline for everyone going through that situation. So he's talking about hedging. And what do we make out of that, Andrei? What do we make out of those bold statements, those bold words?
I think, look, the bold statements are regarding, the boss mentioned that remove middlemen to make things more transparent, to step away from hyperinflation of US dollar or any other fiat currency, right? But I think the more about, a new paradigm of how people and companies and investors interact with investment assets, with real world assets, with tradable assets, and how they store it, and how regulators and governments and society can control it. Yeah, that's my opinion about it.
Paweł, what do we make out of that?
So I believe that, as I'm saying very often, that we are at the very beginning of that road, that all the big names in the financial space are joining the race for tokenization. Like we have BlackRock, we have Citibank, we have Santander Bank, we have all the biggest ones. And what they are looking for in it for themselves is right now they are limited with assets that are available publicly. You can trade them. Blockchain solve the problem. You can trade anything. You can trade milk. You can trade those cups. You can trade the shares in the Birbness or DWF or anything. All the things that were unpublic before and were not tradable for average users right now become tradable. So I believe this is a big, as it has been mentioned seconds ago, it's a paradigm shift. It's a paradigm shift where we're going to have access to everything on chain in the form of tokenized assets, and all elements of anything we can figure it out and everything we can imagine is going to be tokenized. Why? Because there is a big niche and there is a big need for users to not being pushed to use all the intermediates that they need to do right now. For example, today you want to buy a Tesla stock and you are in Poland, you are using Polish broker. You are never buying a Tesla stock. You're buying an artificial ART, which is like a financial product that pretends to be a Tesla stock. Because to buy a Tesla stock, you need to open an account in the brokerage firm in US. With blockchain, you can just trade it. You can just swap the asset that is on chain. That's it, done. So that's why I believe that this market is going to be simplified, which will reduce fees. Why? Because there are no intermediates, which will reduce fees because on blockchain it's much cheaper to settle transactions. You don't need to, connect 100 different systems in between. So I believe that the most important thing that we are taking out from that quote is it's a paradigm shift. It's a lifetime opportunity to capitalize on, like internet in 2000. That tokenization is the internet of 2000 for us today.
I got it. So, to put it in the very simple words, to put it in very layman terms, what I'm thinking is, if I'm new to the market, right? I want to learn about tokenization. There are some basic concepts, right? And here we are, of course, Larry Thing and Vitalik Buterin, obviously, they are known for talking about very general terms, very general broad names, broad statements. It's very difficult for me to get to know the very basic concepts, right? So what I as a layman should start from by learning about those concepts? What concepts are there, and what should I know about them?
Regarding tokenization, I think you
Correct.
should start with, from my point of view, the best tokenization example like Tether, because it literally tokenized fiat assets, right? Yes, it seems it's currency, but it's tokenized currency, right? And you can see how easy and how efficient you can use it. When you can send money, let's say, from Poland to Uzbekistan, let's just go and try to do it with bank.
Mm-hmm.
Good luck. How much time would it take? It's possible, but it's less efficient, right? And it's a very bright example.
Yeah, I'm with you. So the basic concepts, Paweł, what basic concepts do we think of when we think about tokenization?
So I believe, like, I will also refer to what have been said, like, in seconds ago. Like, depends on from which perspective also we are speaking about, like from the user perspective or from the company perspective or founder perspective. So from the user perspective, I believe that users should join blockchain, just do some basic stuff. Why? Because they will understand the concept of ownership. Because if you are telling people about the blockchain, they don't understand what does it mean ownership. Like, I have money in the bank account, I can have money on blockchain. What is the difference? They will see that in bank, it's the number in the company that owns your capital. You are basically lease taker of that money. And you need to ask this bank to make a transfer. And on the blockchain, you will feel the ownership of the assets. Nobody can take it from you. You can do whatever you want. You can burn them, you can send them, you can do nothing, right? So that's very important to start with that, to understand the basic concept behind tokenization, that you might be an owner of those, the real owner of those assets. So from the company point of view, the main concepts that are from the founders, like the people that will try in the future to monetize on or to build something, the main concept that I believe are the most important for the founders is to understand the flaws of the current ecosystem and the limitations. One example, like we might have a Berkshire Hathaway. Everyone knows Omaha Oracle, Warren Buffett, Berkshire Hathaway. Berkshire Hathaway have two series of stocks, Series A and Series B. Series B is like, I don't know, 1,000 per stock, something like very low amount. But Series A is 700,000 per one share, which means nobody trades on that. But a lot of people would like to have a portion of this, of that. So with tokenization, first, you can fractionalize things. So we can split them into the pieces, and those pieces can be tradable. Why do I need to own like the whole share once I can own a small portion of that share, right? And have also exposure onto the market. So far, it was a problem because, let's say, Berkshire Hathaway is paying dividends. So if you would have hundreds of millions users having a small share, how they can distribute this dividend to those users, right? So most probably 50% of that dividend would be spent on transfer of those profits, on the distribution cost. On blockchain, that whole distribution of that will cost you like $1 because it's deployment of the smart contract that will distribute this to the user. So the very important element is to understand the base concepts, why the real world and the normal financial ecosystem and the world that we know outside of blockchain, outside of crypto, can benefit from tokenization, which is fractionalization, which is transactionability 24/7. Today, I can send my money through Swift from Monday to Friday, from 9 to 5. Why? Because my bank is working between those hours. After that, they will not having an in and out sessions on the money. Why? Does internet not working anymore, or what? Right?
Mhm.
So those are those issues that we have in here, and the basic concept should be the ones that are fixing the traditional world with solutions that blockchain can provide, and the limitation of traditional market. So those would be my idea if someone thinks about this in such a direction.
Okay, it makes sense. And Andrei, you're obviously the leader, the head of DWF Labs, right? That is, for everybody who's not familiar just yet, highly encouraged to go and visit their X profile at DWF Labs. They are the big investment, basically, vehicle in the market maker for a lot of Web3 projects right there. They are very popular name. One of those names that I truly look up to, and I admire your work. And with so much experience in Web3, Andrei, how does it look? What does it look like to tokenize an asset from your perspective? What does it mean?
First of all, right, as Pavel said, it's smart contract work, right? But it's technical work. I think if we're talking about tokenization, this thing has a little bit more complexity because we need to make sure that underlying assets exists, right, and store it correctly. And those people who use these tokenized assets can have access to these underlying assets just in case, right? And I think talking about tokenization, right, and what this big guy said, that no intermediate, no middlemen, right, less cost. This is true, but it would remove existing middlemen, but it would create another middleman that will take care of providing trust. It is not upgrade of the system. It is changing the system, but it's still system. And second point about tokenization, right? When we are talking about, crypto, blockchain, especially mainstream media, right? That it's some private stuff, some shady things happen there. In mainstream, it looks like this, but in reality, it literally is not like this. Because in blockchain and tokenized assets, you can check and you can trace each transaction. You can trace each fraction. You can know each owner. And if we are talking about reward assets, I'm more than sure that in 99% of cases, it won't be like decentralized Uniswap. It would be something with at least digital identity. And those who have access to this ledger will know everything and will trace everything. This is also important to know. It's not good, it's not bad, it's just
Different.
Yes.
It
Well,
is how it is.
so what are we fixing here, Paweł?
So what are we fixing? We are fixing one very important thing, like a lot of limitations of the previous system. Like why? Like one of the answers, very simple one. Why today we can buy stocks on stock exchange from Monday to Friday from 9 to 5 is because how the market looked like, how you were buying stocks 50 years ago. There was a floor desk and there was the people with those papers in their hands shouting to each other. So the first version of the stock exchange system was the recreation of the same process that they knew. So right now we will have an evolution of the current system to be much more transparent, much more interesting from the user point of view, where you can really own that asset on your ledger, right? But on your wallet. But at the end, RWA asset is backed by something. So there is a real world asset behind the tokenized asset, right? So for example, in case of stablecoins. We've seen Circle drop on the price 20%, and this 20% drop on the price of Circle was not because bank crashed. It was because 20% of the cash that Circle owned was on the account in that bank. So everyone knew that that might be a loss, and that's why the defect happened. So as it has been mentioned seconds ago, the important element that we need to understand also is not that tokenization is moving the whole world of traditional finances into the crypto, and we are disrupting the system. System will not exist anymore. It will exist because this money needs to be stored somewhere. CBDCs, of course, are a whole another story, because CBDCs is a money on chain, so it's a little bit different thing. But all the other things, most probably for the next decade, or a little bit less, a little bit more, will still be stored in those old legacy systems. Right now, you have a property, for example. The property needs to be saved in the registry of all the properties and owners and everything. And usually this is paper-based. For example, in Poland, like you need to go to the notary, sign the agreement. So if those things are not going to be changed, and they are not going to be changed too fast worldwide, then we will have something like 2.5. So it's going to be a combination of traditional market together with technology of blockchain that is making this world much more digital, much more simpler, making transaction much easier. And the most important thing is that it allows us to swap any asset into any other asset. So, for example, I can buy a ticket for the concert of Justin Timberlake, that is digital one, using my Tesla stocks, and I'm just paying with using Tesla stocks because they have value, right? And they can be cashed out immediately, and I can make that kind of swap in between. So, blockchain is a digital layer to exchange any kind of digital assets. So that's why tokenization is so important, because you can exchange anything to anything. I can give you 5 stocks of Nomad Fulcrum, for example, for 5 stocks of DWF, and we can do such a swap on blockchain. On traditional market, not possible without agreements, without lawyers, without changing all the registries, sending this to the court so they can register, and it's taking 5 months. And in here, one swap, 20 seconds, because that's the length of the block, right? So that's what we are fixing in here.
As it's spectacular what you mentioned, we are on the top down kind of like an approach attitude. So let's talk about and delve deeper how it actually works, right? How it works to tokenize an asset. And we have a map right here with the mechanics, how it all works with the entire mechanism, kind of like broken down to the pieces. So what we're looking at is the deal origination at the very top position, right? As it follows, asset tokenization project is identified, right? There is a need, there is a discussion, there is an idea, there is a concept, followed with by discussions with the issuer, the tokenization platform, and other relevant parties right there. Then we have we have a point about structuring. So how do we take all of those points? Are they legally kind of like separate, and we legally kind of like distinctly go for each phase, and there is a regulator, there is an authority confirming each stage, or we kind of like go all of it, just try to go Wild West, try to design something alongside this map and just propose it to them? How does it look in practice from your side, Andrei, as well, let's say?
From my point of view, every plan is great. It's always better to have a plan than to do
until
not.
you get punched in the face, right?
But
Mike Tyson.
history says, right, that not any plan worked like how it was planned, right?
Yeah.
Everything nice, but I would say this is kind of in between, the old system and the new system. Because, for example, if the token, let's take a look at the point number 6 from top to bottom, right?
Correct.
If the token is tradable on secondary exchange, if this token is not tradable on the secondary exchange, this tokenization makes zero sense, right? We just put a different form of electronic asset and name it tokenization. It's just useless, right? I think it will take several iterations that will definitely create some errors, some mistakes, maybe some catastrophes for some people, some firm, right? But also some nice things, right? And we have a learning curve, and we need to go through it. That's what I'm thinking about.
Got it. Yeah. I mean, I fully agree right now with your take, Paweł. In a second, right? I just wanted to highlight that I truly love this saying from Mike Tyson, right? What he always mentioned, and that's the quote of the lifetime, I suppose. Everybody's got a plan until they get punched in the face, right? That's a golden line that applies so universally, that it applies so well in life and business. It's just ridiculously accurate, right? Paweł, what does it look like in the very details, with this map? What do we make out of that if we want to tokenize an asset?
Yeah. So one of the things I will add to what have been said a minute ago is that right now we are in the exploration space. So different organizations are exploring different business models, different ways to tokenize, different plans. Some are failing, some are doing a good job, some are not, taking into account the regulatory aspect, and then most probably in the future they were gonna have a big issue. But it's an exploration space. And for the last couple of years, we had a lot of exploration in that area of this institutional tokenization, RWAs, this and that. And the reason why regulations are being put right now, like not 10 years ago, is because if you would put regulations 10 years ago, that would kill the market. Like blockchain would never grow if the regulations would be done.
Yeah.
So that's why we are implementing this today, like 10, 12, 15 years later. It was the same with internet. During the dot-com bubble, there was zero regulation on internet, on anything, and everyone was doing everything. A lot of scams, insane valuations, insane races. Sounds similar, right, to what we have right now in the crypto space. So and that was the same. They gave a chance for the market to grow, to expand, to test the different business models, and then they implemented regulations. Because if you are doing this at the very beginning, that is killing the market. So that's a good thing. So from what we can take out from that chart that you are showing right now, for anyone that would like to tokenize anything, is that right now the whole world is moving towards regulation. So like in 2 years, 3 years from now, we will have regulations everywhere. They're going to be most probably very similar to each other. Right now, MiCA, this year, first part have been introduced. The second part will going to be introduced by the end of that year, which means European companies that wants to operate in Europe in a legal way, they need to be regulated somehow. They need to at least read if the assets they want to create are falling onto that. So even on the planning phase, even on the idea phase, you need to take into account, geez, right now we have a lot of regulation in the US, in here. Where are my markets? Where I want to approach the users at the end? So what kind of regulations I need to implement? And you need to start taking into account this part of the market. Like in 2021, 2020, 2016, you could forgot about that. You haven't had to think about regulations at all. You could just build DeFi protocols, ShMeFi protocols, gaming, whatsoever, and that was working because no one was checking anything. Right now, they took a verification methods, and they are starting to verifying us. So I believe one of the most important elements to take out from that from the very beginning today, you should validate if your business legally can operate, because right now the frames has been written, they have been put on the paper. So right now we know which boundaries we cannot cross, and within what boundaries we are allowed to move in, right? With our business. So we could have amazing idea 5 years ago, we could do this, but right now with the regulations, we might have some limitation. And with the new ideas, we already know those limitations. So it's a good thing, because right now I can understand what are the limitations for my business and try to find other ways, or to adjust those to those frames. So I believe that's going to be one of the important takes out from that on every part of that asset tokenization mechanism and deal. We should think about that part, because at the end we can have the best business idea, but regulations will say we are illegal and we'll never have a business in there.
Okay, wait 1 second. So imagine I'm a wolf of Wall Street, right? I want you to tokenize this pen for me. How do I do this? How do I do this?
So I would ask at least 20 different questions, like, would you like to tokenize the pen? Would you like to tokenize the factory, the income from the pen? Or what you want to tokenize actually? You want to tokenize the APY that pen is generating on writing books? Or what is the thing that you are actually want to tokenize, right? So I want to understand what's behind. What is the real thing that we are tokenizing?
Okay, cool. So imagine I want to tokenize the revenue that I get from selling, being a factory of selling those pens.
Okay, so I believe the first thing would be to start drafting an idea how you want to make a revenue split share, because at the end what you are doing is a dividend token, which is falling onto financial regulations, which makes that token security today, which is a problem. Of course, the new regulations are solving that problem, at least in Europe. So in MiCA, you have a special type of the token, which is called ART, Asset Related Token, which is actually something that will help us to do something like that, to tokenize APY, so revenue generated by the factory of pens. But the issue is those regulations are not working yet. They have been implemented, but there is no single European regulator that understands what is really written in there, because they don't understand crypto, they don't understand blockchain. They get like 150 pages of some words and they do not understand what is in it. So I believe we need to take some time. So what would I do is to start actually to try to fit into existing models that are making this APY from the pen factory a utility, or at least something that falls into MiCA regulation, even without yet being regulated, but to be prepared for that and to start from this, not to have a problem that once you release such a token that is based on the revenue from your pen factory, to have regulators and financial police, this financial institutions that will, knock to your door, or some three letters agency, and then we say, but you are doing a very illegal thing. You are trading a financial asset without a license, so you can't do this, and you need to pay a fine for $1 billion and go to 4 months in prison, like some people had a issue like CZ or something, right? So I believe that would be the first thing. And then once you will have some opinion, then you can move on with that and start exploring the market. You will find a lot of partners. You can make a lot of deals, because this is a new asset class that is pegged not to the Bitcoin price. It's pegged to the company revenue. So Bitcoins goes down, and in those over collateralized protocols, your asset will not go down. And that is making the whole crypto market much more sustainable, this and that. But this would be my first element that I would look onto, because from the technical point of view, it's not a problem to create a smart contract that will represent revenue. From the technical point of view, it's not a problem to distribute profits, because you have 100 million profits, you want to distribute 30%, you convert this with USDT or Circle into crypto capital, and you are doing, the distribution, or you are buying your own token and you are doing distribution to the people.
Mhm.
Technically, from the technical point of view, there is not a problem in here. But from the legal point of view, right now, after regulations have been introduced, we might face a lot of challenges to do something like that.
As we always do. Andrei, you say that you are a racing and a competition crazy, right? You're crazy about racing and competition. And such a race, such a competition at any time, technology seems to be, right? And speaking of the technology, of the methodologies of, what would you say is that the one that you're the most familiar with about tokenization, right? Do you what sort of like technologies, what sort of methodologies would you use personally as the head of DWF Labs if you wanted to go and tokenize an asset?
I think, look, fairly speaking, right, technology would be the last question that I would ask myself, because it's really minor thing, right? What I would say that I would think about, regulatory migration. What kind of what jurisdiction for what kind of tokenization I would select for this form of tokenization platform or for tokenized assets, right?
Mm-hmm.
See, how we can participate in this regulatory framework in certain jurisdiction. Because if we want to go, let's say, to European Union, right, and try to change something in terms of regulation, it will be very hard. But if, let's say, we go to Middle East and try to advise these guys, right, it seems more possible because the whole regulation is younger, right? I mean, not in terms of people, but in terms of regulation. And they're open to try something more open, right? Just an example, right? I would first identify which part of world to start working with, then which jurisdiction, then how we can participate in this framework, and then what we would like to tokenize, right? Because it should make sense. We all remember 2017, right? When the first tokenization boomed, right? When people made ICO for tokenized bananas, I don't know, hotels, some and whatever, right? And
Don't forget this one, right?
Points as well, right? And it's gone, right? Some things maybe no need to tokenize them.
No, that makes sense.
Everything structured, right? Let's see the technology, right? It should be cheap and scalable, and it should work.
Good. Fair enough. Which actually takes me, to the overall kind of like an overview of what the benefits are and the challenges. Some sort of like a tiny bit of a SWOT analysis, right? If we wanted to tokenize an asset, just like you mentioned, tokenize bananas, for instance, right? We would not only be going through the process itself, just like you mentioned, even more so than a process is the jurisdiction that you're in actually matters more, right? Because it gives you the set framework of allowed tools to tokenize assets there, right? It's very important to stay compatible and compliant with the regulations, especially since they are tightening up so well. And just like you mentioned, quick shout out to Dubai as well, to the entire UAE right there, because they are incredibly open to that, something that I'm truly a big fan of myself, right? And if we are back at discussing basically the challenges, right, that different sorts of like stakeholders may suffer, because when we were talking about on-chain asset tokenization or TradFi, basically we're talking about investment banks for the stakeholders, the people that can be interested, the family offices, the asset managers right there, versus the traditional finance right there, the asset originators, the tech companies, the protocol developers, private market exchanges. So there's a public and a private market distinction. So what sort of, Paweł, advantages and disadvantages can we all expect being, for instance, a real estate, public market representative that want to tokenize an asset?
So what is advantage of public market tokenization, right? That was the question.
Advantages and disadvantages.
Okay, so like advantages are very obvious. Like right now, I can't have access to the whole world assets. I can't buy stocks of real stocks of any other market than the Polish one where I have account, or maybe I can do with a couple of other jurisdictions. But with tokenization, I will have very easy access, because you will have one common layer to exchange digital assets. Right now, you have hundreds of different IT systems like NASDAQ, London Stock Exchange, like 50 different ones, and they are not cooperating to each other. So if you would like them to cooperate in the Web2 world, everyone needs to be integrated with everyone. It's like spaghetti. It's not possible, right? So the advantage is very easy. It's much simpler transaction execution. So I will have access, much wider access to all the assets 24/7. One of the advantage of tokenization of the public market is this 24/7, which is very important. Imagine today, on Friday, you opened a short on the oil market. And during the weekend, the OPEC cartel is cutting like 20-30% of the production. They decided over the weekend. So you have a loss. You don't know just how much. Because over the weekend, the markets are not working. So you cannot close the position. So on Monday, the market will open with so big gap that you can put like a track factor into it. And then you will know how much you lost. Then you can close the position that is in loss. But with tradability 24/7 and access 24/7 to the market, you can do the damage control, right? So this is very important. Today you can't. So there is a place where a manipulation market might happen, because people can decide to do so just to have the reaction they know that's gonna be on the markets, right? So this is something that will solve. Tokenization will solve, and this is what one of the advantage. The disadvantage of that is that still with tokenization we need to have the institution that will hold the registers of those stocks, of the owners, of everything, and that there is a big challenge, for example, for the public market to move onto the blockchain, because this is something that is not under control of the institution of that country. This is something that is not in their power, right? So this is a big challenge to convince regulators, and this is a big disadvantage to that most probably they will not agree to do so. I know that in Poland, for example, there was an element which was where people were speaking with stock exchange in Warsaw about tokenization of public companies, and to just to store the registry on the blockchain. And that would remove out of the equation one of the organization, which is KIR. So it's Krajowa Izba Rozliczeniowa, who is doing all the settlements, right, between user accounts. So this is making them not being needed, and they were one of the decision makers that decided not to do this. Why? Because they would lose their jobs. So you have a lot of things like this very soft things, that not very like technical ones, where that you need to face with, and most probably that will slow down the tokenization of public markets very much. And I'm more keen on to say that we will see much bigger tokenization of the private markets than the public ones, because the public ones are regulated, and no one wants to give the power of controlling some systems, registers, etc., onto the blockchain and to the people that are controlling the blockchain.
Do you deal with tokenized arts, for instance, Andrei?
With tokenized arts?
Yes, tokenized arts like monuments, like some metal pieces, or for instance some famous Picasso pictures, paintings. Do you deal with any of that?
I think it could be a very good retail product, because in the end of the day, right, these tokenized assets, and I mean not tokenized assets, these investment products for some interesting things, like like tokenized masterpieces or beverages or wines or whatever, right? People buy it to make money, right? They don't buy it to feel nice that, okay, I have like a piece of old Dom Perignon, right? But that they want to gamble, right? And when people want to gamble, it is like building a slot machine, right? And these tokenized assets, all the assets would be like a slot machine. Someone likes wines, please. Someone likes, I don't know, Da Vinci, please, right?
Yep.
That's from my point of view, right? Because for retail people, the most important thing, right? Tokenized assets is great, but without a simple way to have, for example, CBDC, tokenized money, right? It is like to have electric cars with the only petrol stations, It's great. It could be very fast, but you cannot charge it. Just how to buy.
Yeah.
And one of the important things to add to what you just said is very often with this art or any other thing, the problem is that you don't have a legal binding between the token and the real thing behind. You can have a company that owns the Picasso, and they release the token and they say that this token represents the ownership in the Picasso. But at the end, the owner of the company dies, his wife takes control over the company. She says, I don't care about the token, I'm selling the Picasso. And all the token owners were saying, wow, but we are the owners of that Picasso. And she says, yeah, show me the agreement that is binding your token to the painting. There's none. So you are going to be racked by me. So you feel me? That's the big problem, that very often people in crypto don't have an organization that are doing some kind of tokenization. This is what you just mentioned before. Don't have the binding between the token and the real asset, the legal one, that is allowing you to do so. Because the company can, fulfill their obligation for a year, and they can stop. They will stop after a year. And if there is no legal binding, what you can do? Nothing.
Right on. And this actually takes me to the very last infographic that we've prepared for today, right? And there is a bold text. I think there was a groundbreaking kind of like a discussion, back when Richard Nixon, the president of the United States, basically had to, collapse the gold standard right there in 1971, right? And as he declared that detachment of the dollar from the gold standard, this is where basically inflation got out of control. This is where all the financial systems started basically slowly rotting from the inside out, and this is where we've started seeing uh, the emergence, right, of those different types of alternative assets, alternative discussions, right? There were people before Satoshi Nakamoto. Some of them probably we all together know in person, all right, who attempted to create kind of like Bitcoin before Bitcoin, right? There were people who to create those distributed ledgers before Bitcoin come up as the peer-to-peer distributed money ledger, and for many different reasons, some of them failed. However, Bitcoin and cryptos and those word that Web3, this word of the centralized finance, still persists until this very day. And in fact, as a matter of fact, it's doing fairly okay, except for some local headwinds from the summertime, which is a typical normal thing. And here we have Jimmy Rometty, as a CEO of IBM, right there, saying anything that can conceive of a supply chain, as a supply chain blockchain can vastly improve its efficiency. Right. So, what do we make out of those words? Is that true? Is that false? Is that just a bold statement to grab the attention? What is it, Andrei?
Regarding the supply chain, I think yes, it can improve efficiency if blockchain ledger is connected to it somehow, and if these blockchain transactions are bound to goods that are moving between countries or between parties, right? Once it's done, of course, efficiency will be improved, right? But as it's said here, it will create another type of data. You would be able to collect much more interesting data, much more insights, and it will create, much more opportunities to improve efficiency of work on the one hand, and it will create a super edge for those who can use this data properly, and it will increase competition in the market, and then this market will be monopolized. That's what I'm thinking, because someone who has all this data will lead this market easily.
Okay, and how about this one, Paweł, from David Sachs, right? Former CEO of PayPal, right there. And almost any illiquid asset today lends itself well to moving onto the blockchain and becoming tokenized. Is that something that you share? Is that something that aligns with what Larry Fink said earlier?
Yes, definitely. Why? Simple. Like as I was telling at the very beginning, all the assets that are illiquid today might become liquid and accessible. Like imagine today you have a big building, a skyscraper in the center of London. So if you want to buy it, you need to, I don't know, 300, 400 million. But you can do the same deal with retail customers and distributing this to them. But right now it's not possible because there is no solution, there is no system, and those assets are not possible to be tokenized, right? Or yield from that building. You can tokenize just a yield, not the building, because it's much easier to tokenize yield from the building. So for example, you can create a structured product that is going to be 10-year of yield from that building with the discount of 20%. You can start selling it now. The owner of the building will have money to build another one, to make an investment without getting a loan from the bank, and it's gonna have a much better terms with those users, and for the next 10 years it will pay yield to those users, right? So it removes some elements, simplifies some elements, and providing assets that were unavailable before to the retail customers. Another thing, the big business and different businesses types can optimize their revenue streams and how they operate. Why? I was speaking with big organization, a real estate organization CEO, and he told me, Paweł, we have a skyscraper. We want to sell it. There are not many people that can afford to deploy 400 million to buy that building. But we are speaking with a few. We are speaking for a year, negotiating, and at the end they will come to us and say, guys, 20 million down, otherwise we don't have a deal. And what we can do, we always will go for it. Why? because we can't afford to spend another year for the negotiation. So it's better to, cut 20 million from that, sell and make another investment for us than not. But with retail customers and distribution of that, we don't need to negotiate. We can provide really good terms to them. They can provide really good terms to us, and we have a win-win situation on that. And we don't need a year of negotiations. So those people see the opportunity of tokenization and blockchain, and I'm very into that. Exactly because of that. It will make much deeper markets than we have today. Because today,
Right.
the real estate market of commercial estates, it's very shallow.
Oh yeah. And this is actually what takes me to the very last piece, to the very last moment. And this is where I want to give a lot of appreciation to your wealth of knowledge, Andrei. This is where I want to give a quick shout out to you, Paweł, as well, because we've just ended up having an incredibly interesting discussion about, well, basically unlocking the wealth, right? And as we went through the processes for the different pros and cons, different challenges and obstacles and different maps that we can all track on the tokenization field, right? And for everybody who's not familiar with DWF Labs, where can they reach out for more information, Andrei? Is that gonna be DWF Labs on X? Is that the main place for everybody to take a look at?
DWF Labs on X or dwf-labs.com in the internet.
That's where I highly encourage everybody to go ahead and check out those incredible pages. And for Nomad Fulcrum, Paweł, what's that going to be?
So it's nomadfulcrum.com, and on Twitter, on X, you can find us on Nomad Fulcrum handle, where we try to publish all the new financial predictions of ours.
Ladies and gentlemen, to all our viewers and listeners, thank you for joining us on today's session on the RWAs, the Hidden Revolution, as I was joined by Andrei Grachev, the CEO of DWF Labs, incredible proficient, and Paweł Łaskarzewski of Nomad Fulcrum. Gentlemen, thank you so much for joining on today's session.
Thank you.
For the invitation.
For having us here. Thank you.
See you on the next one.